think you're still on mute, Tom. Let's try our intro once again.
Welcome, everyone, to After Hours for TradersPost on this November 22nd, 2024. I'm one of your hosts, Tom Hartman, alongside the never-fail Mike Christensen. How's it going?
Oh, fail quite a bit, my friend. Definitely don't introduce me as never fail.
How's it going?
Doing well. Closed up shop here with a profitable week on the prop firming side. And of course, my Nvidia trade is just going gangbusters.
I was worried there with, I almost touched on it last week with the SMCI drop. There was some sort of thing where I think SMCI or some other money managers would no longer be buying the Nvidia stock because they were one of the main purchasers, or like 20% of the stock that's being purchased was from them, but it didn't really have any blip on the chart. And then when I dug into it, I couldn't really find anything that suggested that the Nvidia might crash. But whenever I see stocks like that, I worry that there's a significant downside coming.
And I think that's warranted. I mean, obviously, there's some short-term connections in that kind of way. I was also a little disappointed to see that a strong earnings report didn't lead to continued upside. I mean, really, yesterday was the big day for Nvidia, and it almost touched my exit target of around 157. But I think the high for the day was only 152.89. So not quite there. Probably should have taken some profits yesterday because the last 24 hours have been a little brutal, down almost 7% from peak. And I'm going to try to hold a little bit longer. I still feel like this could be a support zone. But if you remember, my average in on this one was 110.65. So I'm still feeling pretty good about this whole trade.
So let's say you woke up and it knifed down to 110.70.
It's not going to happen, Tom. Don't put that out there. Don't put that in the universe.
Well, this week, let's go ahead. I'm very happy with the subjects that we have. They're all very near and dear to my heart because they're essentially all to do about crypto and the Trump trade, which, as far as I'm concerned, there's not much else to talk about. So first off is MicroStrategies. There's a whole discussion now, right? They did the purchase of, they did a bond issuance, and so there's a question of, are they a Ponzi scheme? So I want to talk about that. After that, we're going to touch on this idea that Warren Buffett and Jeff Bezos are selling billions of dollars of stock. Could that be a harbinger of doom for the stock market in the months to come? And then thirdly, I want to touch on Cardano and Charles Hoskinson and his potential involvement with the Trump administration. All that and more on today's After Hours. So first off, for the MicroStrategies, what's been interesting is, so the whole idea here, in case you've been under a rock and you haven't seen what's going on with MSTR, the stock has just been parabolic, but correlated with the US dollar, right? And the idea here is that they've turned this middling software company. I say middling like I run a multi-million-dollar publicly traded company, but middling all the same. And the idea is that they were selling software, and recently their earnings, they had like abysmal earnings even. And people have come to the conclusion, look, they're not a software company anymore. They're a treasury for Bitcoin, and they're doing this essentially this leverage play on Bitcoin. So before I go too deep into that, I do want to actually just play a couple of minutes of this clip of Michael Saylor on CNBC talking to I believe it's Andrew Sorkin about what MSTR is doing.
Bitcoin's been a wild run, and boy, have you been right. But I'd love for you to respond to this report.
Yeah, well, I think a lot of people don't understand our core business. We're a Bitcoin treasury company. We're powered by a Bitcoin Reactor. We've got $35 billion of Bitcoin, and it's spinning at 100 vol. So the way we make money is we're selling the volatility and recycling it back into Bitcoin. And we're also stripping the volatility and the risk and the performance off of fixed income securities. And we're transferring that to the common stock. So our common stock is delivering 2x Bitcoin, 2x vol. So Andrew, if you want to understand the economics of this, we generate a spread. The BTC spread we generate, it's a function of the equity premium, the convert premium, and the Bitcoin premium. The Bitcoin premium is the ARR of Bitcoin versus the US dollar. 2 weeks ago, we did 4.6 billion of an ATM. We ran it at a 70% spread. That means we made about a $3 billion BTC gain in 5 days. That would be about $12.50 a share. But over 10 years, that's $36 billion, or about $150 a share, just on that 1 week. This week, we did a convertible bond, $3 billion at an 80% BTC spread. That's a $2.4 billion gain. That's about $10 a share. But over 10 years, that's $125 a share to the shareholders. I think the thesis of the shorts is if the premium in the equity disappears, we can't make money. What they miss is that when we actually borrow money at 6% and we invest it in Bitcoin, and Bitcoin goes up 30%, and by the way, Bitcoin's going up 60%, we're getting a 90% BTC spread, but it would be 80% BTC spread, which means the $3 billion fixed income raise in preferreds or bonds generates the same $125 a share and $30 billion over 10 years. So once you understand that, you have a different view of the company.
So what do you say, though, to those who say there's a risk here? Because this is effectively a levered Bitcoin position. And if, in fact, Bitcoin goes down, this becomes a much more complicated situation.
Yeah, well, the number one risk you take is the existential risk that Bitcoin has an extinction level event and goes to zero immediately tomorrow. But every long investor in MicroStrategy is a Bitcoin maximalist or Bitcoin believer. They've accepted that risk. Once you accept that risk, what do we expect? We expect it's going to go up 29% a year for the next 21 years. It's been going up 60% a year. So the people that are buying the equity are buying the equity because they want 2x Bitcoin, they want 2x vol. And once you accept that idea, you can see, over the last 2 weeks, Andrew, we've generated $5.4 billion in BTC gains. We're making 500 million a day. I'm staring at my screen and we're selling dollar bills for $3, sometimes a million times a minute. And so it's not impossible. I mean, we may very well be the most profitable company in the United States, growing the fastest right now, because there's not many companies that are making $500 million a day doing what they're doing.
Michael,
and so if you don't like Bitcoin.
All right. So tell me that this guy doesn't sound like a crypto founder.
I mean, 100%, especially if you take the stance of being a Bitcoin maximalist. It's a little unclear to me, though, how Saylor is taking their mark-to-market positions, or maybe said a different way, their unrealized positions on Bitcoin and accounting for that as being profitable. Towards the end there, he kind of lost me on how they're making money or posting a profit, because at least from an earnings perspective on what they report on their quarterly reports, those aren't recognized as earnings. So it gets really confusing because the company itself is unprofitable and doesn't even intend to be profitable. You weren't incorrect earlier by referring to them as a middling software company, because I don't even think they do much of the work that they used to do as a company. They're entirely focused on this Bitcoin strategy. So the mechanism that he's describing here sounds a lot to me like the types of leveraged positions that were taken even in the .com bubble, where effectively the companies were selling volatility in the same way by offering new bond issuances. I mean, we can go all the way back to like T. Boone Pickens in the oil sector in the 1980s and look at similar approaches to how they were raising capital in order to leverage debt in order to buy new land prospects and so on and so forth. It feels a little bit like that, but I feel like there's a bubble that always starts to crop up once you start using leverage in this way. I'd be very curious about how investors feel when Bitcoin inevitably has its next 60 to 75% drawdown, and whether they're still truly Bitcoin Bitcoin maximalist is at that point. I'm sure as you've probably been in Bitcoin as long as I have, which has been since 2012, 2013, always as a trader, never as a maximalist and as a long-term holder, although I seriously wish that I was more of a holder, obviously. The number of drawdowns we've experienced have always been massive. One of the first ones in Bitcoin was over 97%, and then it was 92, and then it was 85, and then it was 76, and 70%. And each time the drawdowns are getting a little less severe, but they're still extensive enough to where you're losing an enormous percentage of your current holdings until you wait for the next cycle to appear. And each time that cycle reappears, it's never as large as the previous cycle was. We're experiencing that now, where Bitcoin's year to date or even year over year performance isn't nearly as performant as it once was.
That's right. So that's why he does say a couple of things in this interview and other ones, trying to address some of these points, right? So the idea is that I think he says something like the performance of Bitcoin is like up 60% per year on average, but really they're calculating it at 29%. He said, I believe in an interview with Pat David on PBD, that even though they're borrowing at 0% or near 0%, I think it's something like 82 basis points that they're borrowing, that they could borrow up to 6%. And then still be able to not get margin called or anything on their loans. The bonds that they're issuing, I believe, are 10, 20-year bonds, something like that. So they're long dated. They don't have to worry about that. And it's a 0% coupon on the bond. 55% premium and a 0% coupon on the bond. So they don't even have to pay out more than what the money that they get in. So the idea here is that he says it's structured in such a way that Bitcoin could suffer a significant drawdown and that they would still be fine. In fact, during the drawdown that we had in the life cycle, where Bitcoin went from 69,000 to 17, we were all waiting for MSTR to explode, right? I don't know if you were following at the time. People are paying attention to like, oh, if Bitcoin gets to here, we calculated that this is where they're gonna get liquidated and blah blah blah, and it didn't happen.
It didn't materialize. You are absolutely correct. They seemed to save their position during that period of time. Saylor was just as loud on Twitter as usual, and still a Bitcoin maximalist, of which I have to applaud him for that, for always staying consistent in this strategy. But I think we kind of ignored him up until recently, and then it was like Bitcoin's on a rise again. Everyone's thinking, what's Saylor up to? What's going on over there?
Here's what bothers me. What doesn't pass the sniff test? So I've been around con artists a lot my entire life. And he does two things in this interview, which he does in other interviews, where he says, he describes MicroStrategies as a Bitcoin nuclear reactor, right?
Okay.
Now, it's not a Bitcoin nuclear reactor, right? He's using that imagery, that physics industry imagery that a bunch of economists will use in markets to sort of like trick you into thinking there's laws that he's following here. And obviously, this is what's going to happen. We're taking Bitcoin and we're leveraging it. We're spinning the volatility. He describes it as this mechanism, so that you think to yourself, oh, well, if a nuclear reactor, which I also don't understand, if this is like that, and he understands it, then he must know that they're generating some sort of energy and power, which is what Bitcoin, what he says Bitcoin is. Okay. So that I just automatically, I hear that from a salesman, and I go, okay, I'm being sold something here. Then he does the second thing where he talks about the Andrew Sorkin goes, well, what if Bitcoin has this massive drawdown? And he goes, well, if Bitcoin suffers an existential threat or existential collapse, then even then we would still be fine. So he does this thing where you think to yourself, well, I've heard the phrase existential threat, right? We've heard it all through this political season. We heard all the time existential threat. We have never actually ourselves in our lifetime faced an existential threat, like where it actually occurred. And so we sort of associate existential threat with a thing that could happen, and it lends wisdom to the person who uses the phrase that they're thinking about it.
Sure.
Right.
Which offers sort of a false sense of skepticism.
Right. Exactly. So then we have to deal with this idea here of, what are the characteristics of a Ponzi scheme? So I'm just going to go over them just real quickly here. There's 5 characteristics that are generally talked about. One is a promise of high returns. which we do have here, a promise of high returns from Michael Saylor. The revenue model requires new money to pay for old money, right? Classic Ponzi scheme. Opaque operations, very unclear as to how all this is actually working. No tangible asset or value creation. There's a debate there as to, for once, in one sense, if Bitcoin itself can be considered what kind of asset it actually is, and more so what MicroStrategy is as a holding company for this thing we haven't even yet defined legally within the system, and then 5, risk of collapse. And so even if you go, okay, that it's a financial instrument now, and that he's doing this sort of arbitrage, and that he's taking advantage of this period of time where there's regulatory, there's no clarity there. There's people who are buying the MSTR stock because they're part of an institution that can't buy Bitcoin, but they can buy a proxy for it. They are dealing with people who are there's a bunch of options being traded on the MicroStrategies because of the high volatility. You can get these large asymmetrical payoffs, so that's bringing more money in. There's reasons why people would want an instrument like this and use an instrument like this, not because they think for long term that it's actually be valuable, but that if you're at a company and you need to generate 15% return in the portfolio for this year, and you look at this, you go, well, I might as well do it, because if I don't, I'm going to lose my job. So I might as well buy it. I might as well take the risk. Other people are taking the risk as well. And so whenever I hear stuff like everything that he's saying, and when I take a look at the characteristics of what I've seen as a confidence game, I go, this is all really dependent on that, right? And there's two other things that stress me out when it comes to MSTR, which is why I never buy the stock. I never do anything with the stock. Is one, why on earth is Michael Saylor everywhere all the time, always pimping this MSTR stock? If you have a good product, you don't need to sell it this hard constantly all the time.
Yeah, okay, I'm with you on that. I think the vehicle that he's using is important to recognize because of the way that he's using his company as the leverage vehicle to buy more Bitcoin. And that requires this sales process that he's engaging in. The bigger question I end up having about the whole thing is, what role does Michael Saylor play in promoting the value of crypto from a price perspective overall? He effectively serves as a part of the echo chamber required in order to keep moving the price in a momentum upward direction, right?
Even more than the echo chamber, he's literally saying, give me money, I'm going to go buy Bitcoin and drive the price higher.
Exactly.
He's saying that.
Right. And given their holding right now being over 1% of all the Bitcoin in the world and that will ever exist.
1.2%? Yeah.
Exactly. Which is a huge percentage. I get it.
Right.
Like you're ultimately creating the very market that you're looking to profit from in the future. At what point does that game end is the question.
So that is the definition of infinite money glitch, right? We've heard this with SBF with the FTX collapse. We heard this with Luna. They go, well, we have the system, this basically foolproof system that relies as a basis on this asset that we know always goes up all the time. And so it's reliable, it's risk-free. We know it goes up all the time. And so if you build a system that's based on that, and you have this process, you can generate this infinite money glitch. And so the other thing that bothers me, other than him being everywhere all the time, very calmly and very confidently pressuring everyone to buy MSTR, he even talks in one of the interviews, I had a conversation with this person on the phone, and within 20 minutes he gave me $500 million. Yeah, I've heard con artists say exactly the same sorts of things. All right, very proud about the same sort of things, very casually. You don't see Elon Musk going from show to show to show saying you got to buy Tesla, that it's a good investment by Tesla. You don't hear Jeff Bezos going around going, you should buy Amazon stock when he was the CEO over there. You're not hearing any of this. This guy seems very adamant that we all buy MSTR while being super cash about it. super cash. Okay. But the other thing is forgive me, I forget the last point here I wanted to hit on. All right, that's enough as far as the number of things that are red flags for this. And so I want to stay away. The opaqueness of it, I understand how he's describing this idea of that this arbitrage is. Oh, that was the other thing. The arbitrage is seems to rely on there not being regulatory clarity within the crypto space, right? He's like, well, we're a vehicle that you can buy, you can own Bitcoin through. But once they clear that up, that's not going to take 20 years for them to clear up. And if it doesn't take 20 years for clear up, then where does the demand come for MSTR if you don't really need them as a treasury asset? I was listening today to somebody else on CNBC who it's a mortgage company, and what they're doing is that they're giving out mortgage loans, and they're allowing people to, so they give out a certain amount of money. You take that money, you pay down your entire mortgage. So now your mortgage is with them. They give you a little bit extra money in order to do renovations to your building or whatever to make it a little more valuable. And part of that loan money, they insist that you purchase Bitcoin with it. And that Bitcoin is held in escrow with the loan for a minimum 4 years. So even if you pay off the loan before the 4 years, the Bitcoin is still there, and it's still sort of like a safety. It caps the downside for the company because they're also expecting Bitcoin to go up 29% per year, and they want to use Bitcoin as a way of protecting their downside, as opposed to having to claim the asset and sell it if the person defaults and all that. They don't want to have to deal with all that. They're like, we'll just deal with the Bitcoin asset. Well, more and more of these types of innovations are happening where people are using cryptocurrency or Bitcoin specifically as this asset in order to cover the downside. But what you're not seeing anyone else doing is what he's doing, Saylor's doing.
Mm-hmm.
Why aren't we seeing 5 other companies like MicroStrategy doing that?
I mean, if anybody else was doing it, I would be more interested in their convertible bonds if the company was more interesting than MicroStrategy's. One of the things that concerns me is why would anybody want to purchase a convertible bond for the right to hold access to their Bitcoin strategy and exercise their ability to convert that bond into equity ownership into MicroStrategy if their entire business is built and predicated on Bitcoin ownership and not income generation? Like, I understand there's these potential dividend or interest payout process in the form of a bond, but I would not want to be holding MicroStrategy shares at the end if it's not actually a profitable and thriving business. And it seems like AI has come to really crush their entire offering. I'm not sure where they're going in the future.
That's right. So that, to me, I don't know if it's a Ponzi scheme. I don't know if it's a scam, but it certainly smells like it. When someone is selling something that's it's supposed to be high risk, but they sell it and they're saying that it's low risk, that's where I have problems. I'm nervous.
If it quacks like a duck.
Exactly. All right. Well, speaking of high risk, it's funny with Bitcoin nearing all-time highs and what is it? Bitcoin nearing all-time highs, Nvidia still up high, MicroStrategy soaring, Russell 2000, what is it, 3% away from all-time highs, S&P, all these different things. The Trump trade is in full effect. It can be easy to ignore some of the warning signs that we're seeing floating around. One of these warning signs, I mean, I'll touch on the sensationalistic one over here, which is Warren Buffett and Jeff Bezos selling assets. So Warren Buffett has sold basically a heaps amount of Apple stock and Bank of America, and as well as Jeff Bezos selling a bunch of Amazon stock. And what's interesting here is not that they aren't also buying back other assets. The issue is that they are they're not net buyers, and generally speaking, Warren Buffett or at least Warren Buffett specifically is usually buying all the time, like net buying. And I think he even has a quote. You'll correct me if I'm wrong. I know you're more of a Buffett fan than I am, but he says, like, I don't sell. So to the fact I don't sell the stock,
It's
like
not
I
that he
will never
doesn't
sell.
sell. I've actually studied Buffett for a very long time. As I have mentioned here on the show before, I started my whole career in value investing, studying value investing from Oswald to Motoron, and really considered myself a Buffett disciple for a really long time before I even got into trading. He does sell. He'll turn over positions, especially when they need to raise capital in order to make another acquisition. I think it's more than likely that the massive cash holding that they're sitting on right now is likely to buy a very, very large company. When Buffett wants to buy something huge, he needs to, collect enough cash in order to make that kind of investment, in order to buy the entire company. For the most part, he's had, less than 10% ownership in many different types of companies, but he has made significant full out acquisitions in the past. And I think it's very likely that it's either his concerns about most equity companies out there being overvalued at the moment, just from a price to earnings perspective, or he's looking to make a huge purchase.
Or he can see that something's happening with the fundamentals of the market and that the market's going to take a big tumble.
Yeah, but that's not usually his strategy, is my point. He's not a big, hey, I need to sit in cash to avoid this downside. He tends to invest in companies based on his belief in their 10-year horizons, their 5-year horizons. So he's not as interested in short-term downturns in the market. That would actually be more of an opportunity to buy more with the cash that they have on the sidelines. The activity on the sell side tends to be about whether he believes his positions are overvalued, and it's a good place to exit those positions in order to buy something else. But he's usually always looking for something to buy.
So, all right, let me point out a couple of things here. I just want to answer here Rama's question from the chat. They're asking something about TradersPost. Is there a way to auto break even with TradersPost? So let you know, we don't have a auto break even feature within our system, but so for that you would have to take care of within wherever the signal is being generated. Is that right?
Yeah, that would be more of a trading view setup where you're keeping track of your position and then waiting for it to reach break even. However, it's a little unclear how that becomes profitable if you're not getting to a take profit that exceeds your risk. So we've never really considered that kind of feature.
Perfect. I just want to check, is my volume still too low? Because
I feel like you were up for a second. It was peaking a little bit. Now it's a little bit too low. So let's try to meet in the middle there.
all right, testing 1 2, testing. Just put it up everywhere. All right.
I think that's a little better.
Okay, let's see.
So
All
yeah,
right.
my take on Buffett is definitely that I believe there's likely a larger acquisition coming up. We just had the 13Fs come through for the most recent quarter, and some of that included Berkshire Hathaway's purchases. And I know that they had purchased a little bit more of Sirius. Let me pull up their buys. So Q3, they made a small purchase in Domino's and in Pool Corp, a little company called Heiko. And I know that they added considerably more of their holding into Sirius XM in quarter two. But I think the big question is, what are they sitting on cash for? And I'm not sure we know yet.
So 2 things concern me. One, the dollar won't quit. Okay, so the dollar, let me just pull up a chart here because I think it's worth taking a look at. It's
107 now.
It's bananas. I mean, what is going on?
I think we're going to hit that target you estimated.
That's right, and way faster than I'm comfortable with. All right, so actually, let's go to this one. All right, so I've talked about this before, where this is my long-term support level down here, and we touched it. So this is 2018, 2022, skyrocketed, and now basically the floor that we've been under was the ceiling before. All right, and I was really hoping that this break, that we would actually head lower, because that means it's a relief for the financial system and I could make a lot of money on the downside. I should have put that first. Me making a lot of money, then a relief for the financial system, and then a rise up for the dollar, because a rising dollar means that every other country but the United States has to scramble for dollars. That's what the dollar is going up. Countries have to scramble for dollars. And the sharpness of this move is reminiscent of significant stress within the global financial system. And where we bounce from, this is what always makes me nervous. When we bounce from one of these levels, it means that there's plenty of volume to push us up to new all-time highs and even further. And so if we take a look at this long-term channel here, we can totally see how we could get up here. Like, we absolutely can get up here into the 120 range for the DXY. Which,
and for context on time here, the last time we've seen the dollar that high was about what, end of 2000 there?
Well, because the charts are not weighted for what's happening at the time, it's more about the magnitude of the move versus the mean versus any nominal level. And so over here, for example, this peak over here was the COVID crisis. So we spiked up. Here we had Brexit and there's China deval that was happening within the currency. These peaks were at the financial crisis when we didn't know what's going on with the GFC. So you get these peaks at difficult times within the financial system. And so if we're headed up to a new peak, that means we're headed up to a new difficult time in the financial system. Other than that, it's the yield curve. So we have here, if we take a look at the yield curve, the 2 and 10. All right. So what happens is that when the yield curve inverts, usually we have about 6 months to 18 months before a crisis happens. Actually, let me just set up a chart here a little bit better. Let's do 1 second. We'll do 10s 2, and we'll compare that to the S&P. And then we'll put a line at 0. Yeah. All right. So this line over here that we have is at 0 for the spread. So when this chart, the 10s 2 is below that line, the yield curve has inverted. That means the long-term yields are lower than the short-term yields. And when it goes back up, we've uninverted. So when we invert, that's usually a harbinger for bad things coming. Usually within 1 month to 18 months is where it usually occurs, usually around 6 months. And so you'll see over here, when it inverted, that was essentially near the peak of the S&P during the last cycle, and then we had a downturn. It inverted over here a little bit 30 days before the crash in COVID. It got close to inverting during the whole Volmageddon thing in 2019. Basically, we don't want the yield curve to invert. That's usually a bad news. But the bad news actually starts when the curve uninverts. So like the clock starts with the inversion, and it's when it goes back above that the problem really starts to happen. Do you see that here?
Mm-hmm.
All right, so here we uninverted in September, which, if you remember, coincided with the Fed cutting two cuts basically in one. Remember, we were asking, why would the Fed be all of a sudden cutting twice, all at once, acting super cash, very Michael Saylor like about MicroStrategy. And it happened right around the time where the yield curve uninverted, which makes me think that they also knew, some difficulties ahead. And we're actually now flirting around this inversion level. So if we invert too many times in a row, that's like a consolidation for bad news. Like it builds up. And I think the last time we had something like that was global financial crisis. And then before that, we had that in the .com era. So it's not good when the spread is fluctuating around the inversion level, which is what we're getting over here. We really want this to blow past. And then also when we take a look at the at the ISM, let's go here. PMI on manufacturing. I would have expected the ISM to be rising here, to be like halfway through the a healthy cycle, but we're not. We're like middling. We're not actually moving forward in the way that I would expect. I would expect something more like these moves up, and we're not getting that. So all these things makes me very nervous as to what's actually happening within the financial system, and to me portends that at the next window of weakness, which is should be mid-January to March, that's where I'd be looking to like play shorts and be expecting tops and all these different things. I just want to show one other thing here, and that is over here. I thought this tweet was pretty interesting. So it's fun fact, SPX is on course for 20% in 2 consecutive years. This happened just 4 times in the past 150 years. 3 of those times, returns in the following 2 years were negative. The one time, 1997, 1998, it turned into dot-com bubble before hard crash. So obviously these are just anecdotal past performance, not indicative of future performance. But when I see these things building up, and I see a bunch of euphoria within the market, which is, I mean, Mike, are you feeling the euphoria? You don't even have to be in crypto to be like all excited about what's going on in markets.
This is the moment I wait for, where I'm just hanging on. So yes, the market euphoria is fantastic right now.
That's right. And so that's where I go, okay, we got to prepare for the downside, wait for the next window of weakness. We have to get past the December window of weakness, which makes me nervous. But whatever, it's Christmas. I'm not going to think too much about it. But then come February, I'm really going to be nervous. So that's my Buffett and Bezos plug here. Follow the billionaires, follow the money, follow the oligarchs, follow the elite, and all the days of your life will be good. All right. The final story here, I'm so excited because I don't know if I talked about this a lot on the show, but I'm a bit Cardanite, the Cardano ecosystem for cryptocurrencies, because they're essentially a nerd chain. If you ever wanted a blockchain built through first principles, peer-reviewed studies, doing everything the hard way, formal verification, this is the chain, right? There's not a lot of chains like this. This is the chain. So Charles Hoskinson, who is let's call it polarizing figure, his attitude when it comes to financial markets is very philosophical. Instead of coming online and just plugging the chain and getting VC money and getting the money pump going, he doesn't do any of that. If anything, he's a big anchor on the or to other people a big anchor on the Cardano blockchain, because he's so political. He's such a polarizing figure with his views, and so the Cardano price has been pretty subdued, right? Which is fine for me, because that's what I like. I like the idea that I want a cryptocurrency where most of the price is not because of hype. Let me ask you, other than me like jab around about it all the time, do you hear people talk about Cardano?
For sure, but I think most of the people I talk to about Cardano, at least in my inner circles, are all traders, and it usually comes down to the performance of whatever market cap asset they're following, and whether its performance is better than another altcoin at the moment. I find the connection to the strength of the project and the actual performance of the crypto to be pretty uncorrelated in the crypto space. So it's the vote for whether the project is solid is usually an interesting conversation, but it's usually one that's more of a technical conversation, like the one you're starting here. So I think what I hear, at least within my inner circle, is more about how well is the price jumping, right?
Exactly. Well, so the price has skyrocketed recently. Let me just show this beautiful chart. And the idea here is that what's interesting about it is that not only has the price gone up, what's the performance here? We have a 70% in a week, 170% in a month, 100% in 6 months. What I find fascinating about it is that it didn't start moving, the price didn't start moving based on liquidity, which is what we saw with a bunch of the hype meme coins, right? Pepe exploded, SHIB exploded, Doge exploded because of the memeness of it. Cardano doesn't have any meme hype to it. And so it started exploding. And once it started to come out, that it looks like Charles Hoskinson is in talks with policymakers in the new Trump administration for helping to generate the legal framework for how crypto will be represented within the financial system over the next number of years, even beyond the Donald Trump administration, which is what I've been waiting for years. I mean, not the Donald Trump administration, but for people to turn to Cardano and to Charles specifically as a voice of reason, as someone, as a blockchain that wants the entire crypto ecosystem to thrive, and who have developed tools, identification tools, tracking tools, identity tools within the network that have been inspiring to other chains, but no one has really paid attention to it because number wasn't going up. Mm-hmm. And now that he's out there talking and people are realizing, hey, wait a second, the Elon Musks of the world who want to send rockets to Mars, the Vivek Ramaswamy's who is perfectly willing to work at a efficiency agency called Doge in order to bring down spending of the government, for the idea of who knows what they might do with transparency for voting and for government transactions if they're going to put that on a blockchain at all. I see Cardano as like very well placed to perhaps be the tool that's used by the U.S. government to, even if it's just a template, even if they just fork the platform, as the thing to use. I mean, the only other chain I guess I would even think about for that is Polkadot, as far as my knowledge of the chains are concerned. But we also have Charles Hoskinson, who is a reborn founding father in his thinking, very libertarian, very Ron Paul-esque, very sound money sort of thinking. And so you have the right philosophy with the right technology at the exact right time. And so I've been holding on to my Cardano. I've been talking about Cardano. I don't really go for any of the hype meme coins anymore. My days of Safe Moon and Elon token are pretty gone, pretty much behind me. And I've been waiting for something like this where people go, hey, wait a second. This could actually be something that these crazy Republicans that are now going into office might glom onto and promote and support. So I'm pretty excited about that.
So I want to draw some comparisons here, because I think largely the way that I think about the crypto market is, again, around its performance overall. In absolute terms relative to the other cryptos. So this is an old chart that I had put together. I haven't even looked at in a while, largely tracking the performance of cryptos during the SBF FTX collapse, and then ultimately the U.S. Securities and Exchange Commission, or the SEC, trying to take action specifically against tokens that they believed were securities. And I have this kind of mapped out on the chart here, and the impact that it had on the market at that time, because it was like a serious drawdown in the overall market. And then the question was, which of these coins are going to make it out alive during this era? Now, what I find interesting is right about that point where the SEC had issued their statements, one of the biggest winners of all of this was Solana. Mm-hmm. If you've been in Solana since that point, you're up almost 2,500%. And I think some of the recent uptick in performance is, just in these last few months here for some of the other altcoins. So as I zoom in, let's just say the last year of performance, Solana is still looking fantastic at 343%. ADA's down at 150, 158. So if there's any potential for ADA's run here to catch up with some of the better performers, including the top performer being Doge at almost 432% in the last year, that would be pretty impressive. And it's definitely a momentum question, right? Of all of the pairs that could catch up to the performance over the last year, there's some pretty big ones down there that are worth taking a look at, like Ethereum, Graph Relay Token, Algo's in the list. And I had a few others that were the top 30 by market cap all the way back in 2022. And I'm sure this market cap list has changed. There's probably some other, tokens to consider in this list, but I do find it pretty interesting that over this period of time, the participants or the best performing coins really are the ones that, there's a couple here in that list that were targeted as securities that I've labeled in red here that are actually performing quite well. Solana being the best one since that point. NEAR is in that list. ADA is in that list. Cardano was considered a security by the SEC. These are the specific tokens that the SEC had targeted at that point.
I love this. This is exactly the type of chart I like. Share that with me when you get a chance.
Yeah, sure.
So this is when it comes to the cryptocurrencies, I'm very hesitant to consider performance. My issue is that there are if I needed performance, if I want a number go up, I would not even deal with any layer ones. I'd be in the meme coin market, the hype coin market, making 10,000x like I was doing back in the last cycle. If you want to hunt down all these different things, you put money on a bunch of these different places, you see where the hype is going. 90% of the stuff doesn't pan out. 10% of the stuff, 9% of the stuff gives you some money back, and 1% is a home run, and then you're happy. You pay for your salary for the year. Okay, that's one way of going about it. Hard to reproduce. Can't do anything about that during a bear market. Not really interested in doing that anymore. And so when I see Solana, look, I don't want to go too deep into Solana because I've tried to convince myself to buy more of it. I really wanted to, because you see the number go up and all these people inside of it and VC money there and a bunch of names that I find interesting, if not respectable. I go, okay, maybe I want to be part of that too. I do have FOMO. My whole life is FOMO, and so okay, I wanted to buy Solana. But every time I look into it, it's shadier and shadier and shadier and shadier. The transactions, how so much of the transactions are consensus mechanism. It's just a consensus vote. So the transaction volume looks like it's higher than it should be. The focus on transactions per second, the cost it takes to spin up a node and run a node, like the decentralized aspect of it, the fact that it's basically a meme coin chain. I mean, what assets, what projects are you seeing on Solana that are, or do you see any projects on Solana that are like, oh my God, this actually would be revolutionary, or this would be a killer app, this would change the world, this would be, or even be useful in a week-to-week, day-to-day thing? Are you seeing anything like that?
It's never really been that interesting to me. I don't really care personally about the projects themselves because they don't matter. For the longest time, Litecoin was an abandoned project. Doge was just a joke. Shiba Inu wasn't really doing anything all that important. There are dozens of cryptos that don't really have legitimate projects behind them. And in some cases, they're just complete memes that have still amassed enormous market caps once you've calculated in their price. I truly believe, and I'm sure I'm going to get some hate for this, but the whole crypto market is largely just a priced market. There's nothing that truly connects the market price to the underlying value of the project, because you can't really value cryptocurrencies, not in the same way that we value traditional equities. In equities, we can actually forecast the future earnings of a company and relate the price of the company to its forecasted earnings. But in crypto, there's nothing to do here except for measure where the price is, where we think it's going to go, and basically trade the momentum of that asset class. So when I look at the performance of the returns on these projects, I'm less interested in the backing of the project, its state, whether it's a scam or not. Well, obviously, if it's a scam, that's concerning. I don't want to be rug pulled. But the real question often comes down to, is there enough momentum and liquidity in the market to keep pushing the price up?
So that's exactly it. Oh, and we got a thank you here. Peter says the translation for this says, "Good evening. I'm from Brazil and I follow your channel because of the confluence indicator. I'm still
Nice.
testing it, but I believe you have the best strategies. Congratulations." Thank you
Cool.
so
Thank
much.
you. Thank you for being here, Claudio.
So what you said is exactly right. So market cap, I could care less about it. I couldn't care less about it for cryptocurrency because it's just the number of tokens that are issued in these mysterious ways times the latest price. It doesn't mean you can actually sell all your assets for all your tokens for that price if you needed to, if you had some large amount. And if some large players wanted to get out, then it would crash the price. So I don't care about market cap. I don't care about recent performance, because how do you look at a coin that goes up 1,000%, and then compare that to another one that goes up 200%, and compare that to another one that goes? It's like, all right, so then it's like luck, like it's whatever you ended up lucky to get into.
Exactly. That's why I think of crypto as a momentum strategy. I'm never buying one crypto versus another. I buy a basket of all the ones that are currently performing. I go long the ones that are performing and I go short the ones that are underperforming. And that's just a classic momentum strategy. The backing behind the project is irrelevant to me. I like this question that TJ put in here. What about forecasting future on-chain volume? I think that those are great indicators for liquidity as well as price action. And ultimately, those are the two things that we can rely on if we're looking at these. This entire asset class is basically just a tradable asset class. If the whole thing is one big momentum strategy, then things like on-chain volume are important from an analysis perspective or ranking perspective. Like, which coins am I going to put towards the top here as I build the basket of cryptos that I want to trade?
And because I like risk so much, I much prefer just to have a leverage play on Bitcoin than have to worry about which ones have a better narrative or story or hype or anything like that. That's why I really can't get behind this alone bandwagon. But for Cardano, I go, okay, what coins do I want to purchase? Do I want to hold? That'd be fine if it went down to a penny. Like, what would I be okay with? What network do I want to participate in that even if I could never get out of this thing, it would be fine? It's sort of like buying, when I buy Back to the Future memorabilia. Like, I'm not looking to, I don't care this resale value of it. I like being part of the thing, and I like owning it, and I like being part of the community. And so for Cardano, I go, I love the liquid staking. I love the projects that are built on it. I love the focus on identity, on the technology, like how they develop the technology, the things that you can build now that you can build in the future. And I go, it's the world I sort of want to live in. I want to live in Cardano land.
I see
And
what you mean.
so I want to hold that.
And I love this viewpoint. I really do. It's what I thought would matter years ago. And I think I'm going to go ahead and say I'm like an old school thinker when it comes to crypto, because I came from traditional markets and started to get involved in trading crypto and building quant strategies in this space in 2016, 2017. The fascinating thing to me initially was, how can I leverage a lot of my original understanding? How can we estimate and forecast future value? And it seemed really, really difficult to do. I could not find any real correlations there to the project itself. It's largely why I abandoned it and just focused on price. That said, I always wanted there to be a connection between the two, because that feels more appropriate, in the same way that equity performance is the same thing. If a company underperforms from a net profitability perspective, its price will start to deteriorate over time, right? And unless you're Michael Saylor and you're issuing bonds on Bitcoin, totally different situation. But if you're not earning as much money, you don't do as well in the price, and eventually the price will catch up with your earnings potential. So as a value investor, it's like one of the easiest things to understand. I want to buy companies that are undervalued. Their book value or their intrinsic value is greater than their current market price. But there's just no way to do that in crypto. However, if what you're saying is eventually true, where participant involvement in the project, use of the coin becomes a direct corollary to the market price, that becomes a much more interesting asset class from a fundamentals perspective. I have just always struggled to figure out what the fundamentals in crypto are.
That's right. And so I completely accept the idea that because of the nature of this new asset, we're not going to be able to easily put it into a bucket of something that we have there already. Well, people make the argument: is it currency? Is it does it store value? What is it? But when I see use cases like how the mortgage company I was telling you about before, where they're using it as a collateral, or they're using it as a way of counterbalancing the risk, so that I can imagine someone has a cryptocurrency offsetting a loan, or stuff like I see in Cardano, where you can do these micro loans. So let's say I wanted to loan out some money to my son. I can do that with the crypto space, and use the crypto would facilitate that through a smart contract that I can actually write myself, or have a third party do it for me. Like, I like stuff like that, and I really enjoy that. I love the idea of I do a lot of work on Fiverr, and they're holding the money. Fiverr's holding the money in escrow and then pays out or whatever when the contract is done. But I'd rather that be peer to peer, right? And where the money is in a smart contract, and that, let's say there's some Oracle system or some third party thing that unlocks the funds. I would love for that to be in the crypto space, so I could see how it's hard for us to value, like, what should it be valued at. And so the only thing I really take a look at is how much hype is there qualitatively. How much hype is there for this token? And if I get any sense whatsoever that part of this price is hype, I have no interest in participating inside of it. I need good technology, and Cardano has been so hated within the crypto space. It's a top 10. It's a top 7 now for market cap for non-stable coins. Top 7, and has no hype. None. No one's sitting there hoping for, like, oh my God, Cardano's going to hit $5. No one's really sitting around on mass scale buying it for that. There's not a huge amount of leverage inside of the system. So I go, okay, when I was at, like, what was it, 30 cents during the bear market, I go, then it's 30 cents. Like, people can sell it hard enough.
I think what people tend to like too is any of the, and this is somewhat of a misconception because of how fractional you can get with crypto, but anytime the coin is under $1, I think people get pretty excited. I know people were very excited about Doge being priced at one millionth of 1 penny. I can't remember where you say that. The point is, it's 0.000001 of 1 penny, and people thought that was great because it's a very low price point. Even a 1 tick increase in the price would be a huge increase in value. I totally understand that. And so I think from that perspective, Cardano looks attractive, but I just don't know where that particular facet or property of the crypto translates to overall price action at the end of the day.
Agreed.
That said, ADA is moving at the moment, so it is an interesting one to keep an eye on. It's in the momentum list, and I would definitely throw it in the basket of cryptos if I wasn't currently just focus on the top 5, and I'm about to exit all those positions.
Yeah. Just the final thing I want to say on that is that it is moving now. Cardano is moving now, and clearly it's moving because of hype, right? People are excited that he's in the news, and he's talking to the administration, blah, blah, blah. It's for hype. But the hype is based around policy and legislative acts. And so I that's the kind of hype I can get behind, as opposed to they put a P in front of Elon and turn that into a meme coin. They go, this is the new meme coin. Like, that's not the hype we're having here. Or SafeMoon, SafeMoon, which is the classic example of this coin. Let's go to the moon. Let's go to the moon safely, which makes no sense. The hype here is all based around, hey, this is a pretty secure blockchain, and do focus on fundamentals, and maybe Elon will take shout it out or whatever. And so this is the type of hype I can actually get behind. So
I understand. I understand.
All right. So before we leave for the day, I just wanted to okay. So just to be clear here, for the Cardano, the trade, obviously I'm going long Cardano, but the and what we saw before with the Bezos and Buffett, I think that's just another point in the cap of the long dollar, right? If we are going to be inside of if we do have a downturn coming, the dollar will keep going up, right? And if it's not, well, it's going up now. So there's some sort of liquidity issue that's going on, even with all the money printing that allegedly is going to be happening. It's still going up. And so I think the long dollar play goes well. But for the MSTR, if you had to take a position, I don't think you have any position in MSTR, but if you had to take a position, whether it's long, short, options, or anything like that, what would be your play if you had to? You had to, $10,000, you had to put it on an MSTR bet, what would be the direction and how would you express it?
Long calls for now, and largely to keep some of my risk fixed there. At least if at the worst case scenario, I've just got my entire options contract would just expire worthless. I don't think I would own any of the equity itself.
I see. Okay, so the long call options, that makes sense. Yeah,
and I think it's going to obviously benefit from the upturn in crypto. And for as long as this move is going to run, it's going to continue to see price appreciation. But the moment Bitcoin pulls back, it's a different story.
How juicy would it be to own puts, strike 50% of the way down here, and then for those to actually pay off in a year? That'd be so pretty sweet. That'd be the Peter Schiff trade.
So I'm looking for the other side of the crypto trade. I would be interested in long puts, deep out of the money puts on Bitcoin and Ethereum right now, starting to prepare for the reversal in this cycle. That would be more interesting to me, because if we do see a pullback, it's the same thing as always. There's usually 60-70% overall drawdowns in this market. So I'd be looking to hold as many puts as
Where do you think we're in there? Do you think we're more than 50% of the bull market in crypto already? That's
hard to tell. I've measured the length of our bull cycles in the past, and they're varied. It's hard to tell how long this is really going to last for, because this took a while to actually get to this point. So it's a little uncertain how long it'll take us to get there. It's also a lower volatility environment compared to previous bull markets where volatility was higher.
Or for all risk assets?
Just Bitcoin and Ethereum. The only way I can measure the volatility is by Bitvol and ETHvol over the period of time in which that was measured in the options markets there. So it's hard to tell, the whole market holistically. But in those upturn periods, there were higher measures of volatility during those bull markets than there is today. So this is like this slow, march upward. We're experiencing great price movement. There's no question about that. It's just not as big as it was if you were around in 2017 trading crypto in November of 2017, right? I remember Thanksgiving of 2017 being the most insane crypto upturn that had measured volatility way higher than we're at right now in this bull run.
Well, if at Thanksgiving dinner you hear anybody who's not in the financial space talk to you about crypto, like without you mentioning anything, please let me know so that I know where the top is.
Yeah, exactly. Well, I heard recently that Jim Cramer has mentioned that Bitcoin's on a bull run. So
no. Someone's paying. Why would he do that? He knows his reputation. All right. So before we leave, I just want to ask one thing, and that is, when is TradersPost going to follow the MicroStrategy's idea and buy a bunch of Bitcoin and basically turn into a Bitcoin treasury? Let me know at the next meeting. Thank you very much.
I can do that. I will let you know.
Perfect. All right, everyone. Thanks for watching After Hours. I'm Tom Hartman. This has been Mike Christensen, and we'll see you next Friday.
Have a great weekend, everyone.